But I think we're just getting set again, because this time it's more a global phenomenon rather than a China-centric one that we saw a couple of years ago.
Well, hello and welcome to Assay TV. Today I'm delighted to be joined by Squire, who is Portfolio Manager at Acorn Capital, based down in Melbourne. Rick looks after the research and stock selection of the metals and energy sector. Rick, great to see you here today.
Thanks, Leo. Good to see you.
Yeah, Rick, I wanted to talk to you today a little bit about sort of tech metals and metals going into things like batteries. With the gold price has come off a little bit recently, but we've seen a lot of interest in the metals space. What's your take on the outlook for sort of the key battery metals? I mean, particularly given that recently in the United States we've had the Biden victory, which perhaps suggests that America is on track to be more favourable towards the electric vehicles. The UK recently also announced that they were going to phase out and ban the sale of fossil fuel cars by 2030. What's your outlook on battery metals?
Yeah, for all those reasons you just raised, Leo, I think the outlook for the energy storage or electric vehicle metals is really positive. And it's something that we make sure that there's a core part of our resources portfolio is covering those metals. So there's actually a number of metals that are comprise those the key ones required for the energy storage market. So we like to sort of break that down into those key parts, and there's a good reference point to look back to the mini boom in these EV metals between roughly 2016 and 2018. And what we've got to remember is that boom was essentially driven by demand in China, because China was so far ahead of the rest of the world in terms of the production and use of electric vehicles, that that boom was really driving consumption in those countries. But you've just pointed out that the Biden election and a lot of the initiatives coming out of the EU are really going to drive a new uptake of demand. But just simply looking back to the last boom, we could see there were a couple of real beneficiaries, and that they included lithium, the rare earth elements, nickel, cobalt, and even copper. I think will be a new one to add to the list this time.
When you look at those metals, which one gives you the most optimism?
Yeah, that's a good question. When we think about it, we like to sort of spread the risk, because it's very difficult to sort of pick the winner in the pack. But because the factors that are contributing to that demand are quite different for the different metals, and they're quite fluid in terms of the change. So the metals are, we really like all of them, but we can see really good opportunity, certainly in the near term for copper. There's not many really good direct copper exposed companies, but you can see a real surge in demand there. But also like lithium and the rare earth elements. And the rare earth elements is a little bit trickier because there are so few players to actually get in terms of production. Yet in the developers, there's a number out there, but there's all sorts of real tricks in terms of technical risks that are associated with those potential producers in the rare earth space. And the same thing applies with cobalt. That we saw cobalt was something that people loved a couple of years ago and was scrambling to get on top of, but it was actually very difficult to pick a company that had really good cobalt exposure without taking enormous amounts of technical risk.
But given that cobalt is usually linked with nickel and copper, do you even really need to look for a cobalt play? Can you just play the copper side or the nickel side of that?
Yeah, that's right. So when you look at it, essentially the cobalt, as you point out, is pretty much a byproduct to those projects. So when you look at it, it's got to stack up as a nickel producer. It's got to stack up as a copper producer to actually make money on those cobalt credits. So it's not something that we go out and look for individually, but we look at it and say, well, okay, if it's a good project and it has a really strong cobalt credit, then that would be of interest to us. So on the list, cobalt probably falls to the bottom just because of the difficulty of actually finding that exposure. Because at the end of the day, it's Glencore, which is really the big cobalt producer, but no one would go and buy Glencore just for its cobalt exposure because it's such a large and such a diversified company.
I mean, one of the points you touched upon there is the fact that some of these metals are quite technically challenging to process. You know, rare earths in particular. You know, famously, a number of byproducts that are produced that can be difficult to dispose of. Looking at lithium, for example, you know, how do you weigh up the sort of technical risk of a lithium project?
Yeah, that's a really good question, and that's something we spend a lot of time thinking about at Acorn. So I'm a geologist by background. I have an analyst that works with me, Karina, and she's a geologist too. So we think very carefully about the technical aspects, and that's particularly important for the developers. So when you look at a company, and they might have a nice project, but we saw in the last lithium boom that each project that started up, you know, they all had technical challenges that they had to overcome, and each one of them, when you got into the deep detail, you know, their problems were quite bespoke to the project, and what those problems ultimately reflect are differences in the deposit. So, you know, as a geologist, you know, what I know is that the lithium deposits, these pegmatites, they're the most complex mineral systems on the planet. So, you know, in terms of the magmatic evolution, the process that actually generates those deposits, it's what we call, it's like the kitchen sink of material that's left over in the magma chamber, gets spurted out to become the pegmatite. So it's got all sorts of junk in there. So when you hear about them, you hear about these lots of tantalum, and there's tin, and there's lithium, and there's all these other elements in there. And so what you find is there are different minerals, different percentages, and there's different continuity in terms of, you know, how those different zones or phases actually grow. And so what that means is when you come to process them, just because someone has a learning from one deposit doesn't mean it can be applied 100% to the new one. That there's, you know, incredible complexity in those mineral systems, and that thing gets translated into incredible complexity in the resource evaluation, the mining method, the processing, and then ultimately trying to get that end product. And so that's something that when we go through and we look at these projects, you know, we're acutely aware of all those potential pitfalls, and so we think about that and how it's actually going to cascade through that process. And the ultimate example of the difficulty is, you know, anyone that remembers the last boom, we could remember the companies that were going around saying, oh, we expect to achieve recoveries of 70, 80, even 85%, yet almost no one is getting recoveries greater than 60% today. So how can there be this enormous disparity between the forecast recoveries of years ago compared to the reality of what they're achieving today? And there is a little bit of excuse. They're trying to produce there's a little bit of an explanation in that they're trying to achieve higher recoveries and so higher concentrate grades, which means you drop the recovery. But even if we return to the concentrate grades of a few years ago, the recoveries would never be anywhere near that. And that just reflects the complexity of those mineral systems.
To what extent has there been sort of technical advancements made, though, in the last few years, which sort of can hopefully maybe de-risk some of these projects going forward?
Yeah, that's a great question. So there's obviously been a lot of work done on that, even with the falling price, you know, the constrained capitally. That a lot of the companies have put a lot of work into ore sorters. There's been one area that they've concentrated on where they can actually, you know, crush the material and they can sort out a lot of the problematic material. And so, for example, in the spodumene producers, so spodumene is one of the most common lithium-bearing minerals that they mine, and what they do is occurs in a white rock. It's a white mineral in a white rock, but often it occurs next to within a system full of basalt, which is a dark blue-green rock. And so the ore sorter is quite good, very simple. Just reject the dark material, keep the light material. And you think, oh well, what's the big deal in doing that? Well, the basalt actually contains a reasonable amount of iron in it, and it has a similar density to the spodumene. So when you run it through the processing circuit, you actually concentrate up not just the spodumene, you actually concentrate up the basalt too. So suddenly you enrich the rock in iron relative to the overall composition. So you start with an overall rock with maybe 0.5% iron in it. You run it through the processing circuit, but you actually concentrate up both spodumene crystals and basalt, and you can end up with over 1% iron, and that's really problematic for the refineries. So there's a sort of double-edged sword in terms of that processing circuit. So that was one of the real challenges that a lot of the spodumene producers faced in the last boom, and so been a real focus on how you can more efficiently separate some of that gangue material, the iron-bearing material like the basalt from the other things. So and there's been advances in terms of reducing other minerals like the micas that get locked up in the circuit, and just working on just better efficiency of running the circuits overall.
Absolutely. Let's move on to nickel. Obviously, not all nickel is used in batteries. A lot of it most of it goes into stainless steel, and you're looking for the sort of the class 1 nickel. What do you look for in a good nickel project when you're thinking about investing?
Yeah, that's a good question. So at the moment, only about 3% or so of the nickel actually goes into the batteries, but that's a real growth area, and that's expected to grow substantially over the next few years. So when we're thinking about nickel, we're thinking about the nickel deposits that can actually be used in that part of the market, as opposed to just any nickel project. Now companies like BHP are big enough and have got the capital that they're actually modifying their processing circuits so they can take some of these deposits that traditionally haven't been able to access that part of the market, that they can actually produce a product that can. So there are exceptions to the rules, but generally speaking, there are deposits that are suited to the battery market, and those that aren't. And so we look at the ones that are. So in Australia, the best ones are the nickel sulfide deposits. So the classic deposits you see around Cobalt. So they're the ones that we look at. So then again, it's going in and understanding the issues with those deposits in terms of the scale of the deposit, its mineability, and ultimately what that's going to mean in terms of the costs and the volumes that they produce.
And also, obviously, the type of ore that they're mining makes a big difference in terms of the method that is required to process that into a sort of a high grade, nickel end product. So you're selecting ores with the technical processing sort of in mind, yeah.
Yes, definitely, because we think that's really important in terms of the ability to then sell that product. Because if you're aligned too closely just with steel production and there's a pullback in steel production, you're really going to get hurt quite badly. But if the battery part of the market is booming and continues to grow, the battery or the battery companies who are looking for nickel can't just sort of switch to the dirty product, because with those contaminants that can get locked up in the batteries, that's something that they're acutely aware of, not having that material, and which sort of then touches on the interesting side, the discussion that scale is actually important too. That when these refineries are actually producing this material, they just don't want the sort of teaspoons of different material from all over the place. What they're looking for is a large supply of material of consistent quality over time. So that consistency is really important for the battery manufacturers. So they'll end up paying a premium for a product that they know is actually quite reliable, as opposed to oh, well, I can get it cheaper from somewhere else, but I'm not too sure about the quality. You just can't take that risk. And that's not just for nickel, it's, you know, right across the board.
But that sort of material is available in Australia.
Oh yes, it definitely is, and there are deposits in North America and stuff. So it's the sulfide hosted deposits are generally speaking the best ones. Whereas the lateritic nickel deposits, you know, they can produce large volumes of nickel. And as I mentioned, there are exceptions like BHP and what they're working on, but generally they're less suited to use in the batteries.
Let's move a little bit on to rare earths. You mentioned earlier. Of all of the suite of the rare earth metals there, rare earth elements there, which ones do you think have the most promise for use in EVs and will benefit from a growth in the EV market?
Yeah, it's a good question. So there's actually a number of rare earth elements, but it's neodymium and praseodymium, often referred to as NdPr, are the two that are you know, have got a really large market. So an example of that is a you know, a 1 megawatt wind turbine will actually require about 200 kilograms of NdPr, and so they actually require large volumes of large amounts of these rare earth elements, and what they're used for is essentially they have a multitude of different uses in the you know, in these electric vehicles, but it's for the high strength magnets that are used. That's a particularly good use, and so in the drive chains for the vehicles, for the wind turbines, you know, so large volumes are really important componentry of these of the drive system. So that's why you know, they're a real focus. So then it's sort of, well, okay, there are a number of deposits, and you know, the thing about rare earths is they're actually not that rare. They're actually, you know, quite common, but the ability to extract them is the real trick, because there are actually, you know, differences in mineralogy of these deposits that are creating some of the issues, like you mentioned, some of the radioactive byproducts that you know, you've got to be very aware of. It's not just grade that's important. It's some of the other risks in terms of the mineralogy and the byproducts that come with processing that ore.
And there's not many companies around who've been successful so far at processing.
No, that's right. So you look at one that's been outstanding. It's Lynas, and you know, Lynas, you know, benefited from a perfect storm, you know, almost a decade ago, when, you know, the Chinese suddenly put a trading ban on with China to send their rare earths there. So suddenly they had to look elsewhere, and there was a great deposit in West Australia, Mount Weld, that they could start up, and they built their processing plant in Malaysia. And but anyone that's been on the journey with Lynas since then has felt the heartache, not just the downturn in the commodity price for rare earths, but also the real challenges that they faced in terms of, you know, starting up that circuit and processing it. And Mount Weld is a fantastic deposit. It's so much higher grade than its peers out there. So it wasn't a problem with the asset. It's just that it is very difficult to actually commission those types of operations and get them up. So then there are other deposits out there, but then you start to deviate from that style, and you're looking for some things that are a bit different. They're either lower grade, or in the case that they may have monazite, which is a mineral that contains the rare earths, but it also contains high concentrations of, not high, it has elevated concentrations of uranium and thorium. So when you split off the rare earths which you want, you're left with a product which is enriched in the uranium thorium. And so that's what's caused some of the problems that Lynas has recently faced in terms of, you know, that byproduct, and that's why they're moving their cracking plant, or largely they're moving their cracking plant to Kalgoorlie. So they're not, it's not, you know, super enriched, but it's elevated levels, and that's what's creating some of the problems for them.
I mean, given the long journey they've had and the ups and downs, it must be quite sort of intimidating for investors to get into a potential new project.
Yeah, that's right. So any company that crosses the line, it's the potential to go on to be a $3 billion plus company, and I'm sure they'd all love to do that. Particularly where they are now, but crossing that divide from where they are now, which most of them are, excuse me, less than 300 million. There's a few exceptions, but most of them are sort of the smaller, sort of 50 to maybe a few $100 million market cap. To do that gigantic leap is something they all aspire to, but it's very difficult. So then you've got to look at other aspects, like China produces 75% of the rare earth today. Now, a lot of that is because they actually do the back end processing, but they actually produce about 27 or 30% they actually mine 27 or 30% of the rare earths as well. And so the reason for that, one of the large reasons for that, is that they have a unique type of deposit, which is in these ionic clays. And there's a little bit of chemistry, if you can hold with me for a second, that the rare earth elements get absorbed or adsorbed. They actually sit as elements or ions on the outside of clay particles. And so it's actually quite easy for them to strip those metals out, because they're just sitting as ions on the actual clay particles. And it's a reasonably simple process to mine and strip those metals off. Whereas others, if it's in monazites, requires a far more sophisticated and much more capital intensive process to actually extract the metal. And so there are very big differences in deposit types. So you can't just lump them all into the one basket and say, oh, well, every single one of them needs $1 billion or $2 billion to mine. Some of them can be done cheaply, but there are very few deposits of that style that are recognised around the planet. So maybe there's going to be a bit of a rush to identify new deposits of that style. That I think that would be an interesting.
Do they exist outside China?
There are a few examples out there. I think there's a company, Ionic, that the Ionic Rare Earths, or Ionic, I think it's Ionic Rare Earths have got one. So there are some examples of companies that got it, but it's understanding the grades, the continuity, whether it actually works, the extraction. Because again, you've got to be careful. There might be some similarities, but there may be many differences, like the lithium project. So just got to be mindful of some of those differences. But yeah, they are known, but they're quite rare. But it could be rare because no one's looked there. So if you never look for them, you're not going to know that they exist. So I think there are a few people looking out there, and there are also companies like Aluka's a big mineral sands producer, that they've got large tailings dams that are full of monazites, and already sourced some of them they actually are selling to China. So there are companies out there with large sources of this material, but there's some work to be done in terms of really understanding the processing to efficiently extract the rare earths from those monazites, because you might have two monazites, but one can be more enriched in uranium and thorium versus the other. So not all monazites are the same, like not all oils are the same, So that's one of the tricks. There people out there, they have monazite deposits, but they have relatively low levels of uranium, thorium, and others have relatively high. So again, it's a relative thing that gets moved up and down. So if you pick it up today and hold it in your hand, you're not going to get irradiated or get cancer off it. But in that processing circuit, those levels of concentration do become important.
And how does the current supply of these metals compare with the forecasted outlook?
Yeah, that's a good question. There's certainly, the projections are for a big ramp up, and so when we think about the demand, the wave of demand that's coming for these metals, is that it's not just for electric vehicles, which people can visualize. It's also that energy storage. That if we're going to see more wind turbines and that out there, is not just Biden, but Europe's got a really big push on on that transition to the low carbon economy. There's really strong demand, and it's 200 kilograms per megawatt. And the UK, Boris Johnson just announced a couple of days ago that the UK is looking to add about 2 gigawatts of low carbon power generation to the mix. So you think about how many wind turbines that means, and how much neodymium and praseodymium that you need just for the UK alone in the next 5 years. So he put before 2025. So that's just the UK. Then you think about Australia, you think about America, all those other parts of Europe. Certainly there is strong demand. So that's something that depending on who you read for the commodity analysis, that there's definitely, most people are talking it up.
Absolutely. At Tesla's Battery Day a couple of months ago, there was obviously a lot of talk from Elon and his team about mining, and Tesla looking to have their own sort of primary supply of certain minerals. How do you think this trend of car manufacturers buying mines and controlling their own supply chain will affect the market? Fragmentation of the supply chain, and what opportunities does this create for miners and investors?
Yeah, it's a really interesting question. I personally not too sure where it's going to go, but because you should never doubt Elon Musk. So what the amazing thing to put it in perspective for me is that the biggest mining company in the world is BHP. Tesla is more than 5 times the size of BHP. So if Elon says, go and spend a lazy 100 million investigating something, it's like, it's loose change. It's chicken feed to them. It's not important. So he genuinely has an opportunity to go and do something outrageous, and that's what he's got a history of doing. He's actually moving into areas where no one would traditionally go, and actually being really good. And people love to be part of a winning team. And Tesla's certainly a winning team at the moment. So his ability to attract, quality people to come in and help him in this, in this vision to become a lithium producer, it's actually quite high. So it's not as crazy as some people are suggesting. Now, having said that, I still think there are all sorts of risks and challenges, and you also then start to become a little bit cynical and say, well, why is he doing that? Could this be a way of just trying to control the price on a commodity that is really important to him? And because it was really interesting that he made that announcement to say, lithium, there's oodles of it, because he said, they're going to build a lithium refinery next to the gigafactory they're building in Austin, Texas. So it's like, wow, they're going to build a refinery there. And then he's saying, yes, and we also got the ability, we're also investigating the development of a mine from lithium clays, a style of deposit that hasn't been exploited on a commercial scale, hasn't been exploited before. He'd say, we've picked up tenements, no one knows where they are, but picked up tenements in Nevada, and looking and have this very simple, environmentally friendly method for extracting them. So, like I said, if anyone on the planet can do it, it's Elon Musk. There's enormous challenges. And then the interesting thing was, a week later, he then signs a 5-year offtake with a 5-year octane option with Piedmont. So it's like, so one minute he says there's oodles of lithium, we don't need any more. Then he goes and signs a 10-year offtake. So whether it's just all part of that, negotiating, just trying to keep control on the price that he'll move into it, I don't know. The cynic in me thinks that maybe there's a little bit more to it, but never write off Elon Musk. If anyone's going to move in there, it'll be him.
Absolutely. And there are some other car manufacturers who are now saying that they're looking to sort of, control the supply chain. I know Ford made an announcement recently along those lines. I guess where Elon goes, others tend to follow.
Yeah, that's right. And we've seen in the past that, there's a bit of a run, and people will go in and follow, whether it's, some are, lining up the offtake to be aligned, whether it's, Toyota or it's Tesla. They've certainly been active in the lithium market, which is key. And I think they're seeing that. But yeah, it'll be time will ultimately tell, where they land. But that's just creates more opportunity, and it's quite an exciting opportunity for investors. So I'll go back to the 2016 to 2018 boom. There was a handful of small producers. Suddenly, a sea of explorers and developers appeared. A couple of them crossed the divide in terms of got into production and actually started producing some metal. And I think then there's been the pullback over the last couple of years, but I think we're just getting set again, because this time it's more a global phenomenon rather than a China-centric one that we saw a couple of years ago. And so that's the thing that excites me, and I think it probably concerns some of those car manufacturers that, yes, it will be big, and it's not just the car manufacturers. It's the energy storage market. There'll be other players involved in terms of seeking these metals. So that's why we're quite excited about the opportunity and how it plays out.
And obviously the EV market has matured a lot since 2016. The range of these cars is now comparable with a lot of sort of petrol cars. So whereas before maybe a lot of the boom was built on hype, now it's actually built on possibly reality. I mean, how long do you expect this next boom to be? Last time was a couple of years. This time longer? Yeah,
well, I think it will be. It's hard to call. We're not in the process of calling those sorts of booms or commodity prices, but we just look at the look at the demand outlook, and we look at the supply that's available. Like there is quite a bit of mothballed production, particularly in lithium, that's sitting there, and there are even a few large nickel operations that are sitting there mothballed or running under capacity that could start up very quickly and fill some of those gaps. But I think with the demand outlook that is being forecasted, it won't take too long to get up and reach those levels. And you then have to go back and look at the innovations, and when humans went from using horse and cart to motor vehicles, that update, there's been plenty of people given great examples. The adoption rate was really rapid, in terms of that initial growth rate, that within a decade it went from about 20% to 80%. So there's just really rapid, that everyone wants to be part of it, particularly if it's more economical. So if it's easy to access your power, it's more economic to have a electric vehicle than a combustion engine vehicle, then that's it. And so you're seeing a number of drivers, whether it's just, whether you call it like the Greta Thunberg effect, that's just a recognition of that climate change risk and wanting to do it. There's also government mandatory policies coming in terms of, emission standards. So, setting those emission standards, like, for example, the UK just brought forward their ban on petrol and diesel vehicles will be banned in the UK from 2030. And from 2035, hybrid vehicles will be banned. So originally that ban was just in London, but it's now being brought forward for all of the United Kingdom. So if they're going to do that, what's California going to do? What's Sydney and what Melbourne and all these other big cities? They don't want to be left behind. And so there can be a real race to do it. And particularly, as you point out, if it becomes more economical, if you can buy one of these vehicles for a similar or lower price than what your existing vehicle is, it becomes an easy choice.
Absolutely. It's going to be a fascinating sector to watch over the next few years. But thank you very much for your insights into it today. Great to speak with you, Riskreward.
Pleasure. Thanks for having me, Leo.